Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. Today we are diving into a report from QUAKER Investment Trust about the CCM Affordable Housing MBS ETF. Don't worry, it's not as dull as it sounds. I promise we'll find some interesting nuggets. It might just be that ETF's numbers that will own you, haha, get it. This report is from last summer, June 30, 2024, and gives us a look at how this fund, which trades under the ticker OUNS, performed over the past year. Basically, it's an annual review of its financials and investments, telling shareholders what happened with their money. First, let's talk about costs. For every $10,000 invested, it costs about $30 or 0.3%. That's actually pretty low. So for every $10,000 you invested with them, only 30 went to expenses. How did the fund actually perform? Well, during the year, the fund returned 1.62%. This means that every $10,000 decreased to $998. Not amazing, but also not a total disaster. It is important to note that its benchmark index performed even better, returning 2.12%. The ETF did not keep up with the market. So what would have happened if you invested $10,000 since the fund started? Well, the report includes a line graph showing the total return on a $10,000 investment since its inception in July 2021. If you invested back then, you'd have $90 now. In dollar Tollivly be different. Looking at the average annual returns, the fund shows 1.62% for the last year and 3.17% annualized since inception, so it has struggled in the past few years. Here's a quick snapshot of other key stats. Total net assets are about $117 million. The portfolio has 206 holdings, which mean a bunch of different investments, and the portfolio turnover rate is 58%. Portfolio turnover rate is how often they are buying and selling, and 58% is pretty active. So what did they actually invest in? Sector-wise, about 99% is in mortgage-backed securities. So this is the core business, and the rest in short-term investments. Their top holdings include securities from FHLMC, also known as Freddie Mac, and FNMA, also known as Fannie Mae, with a coupon rate of 3,1%, expiring in August 2052, and with 6.9% to total net assets. These are government-backed entities, so their investments are linked to the housing market. Here's a big change. As of March 18, 2024, the Impact Shares Affordable Housing MBS ETF became the CCM Affordable Housing MBS ETF. So it was basically reorganized or changed into the CCM Affordable Housing MBS ETF. Also important, there were changes with the accountants. Because of the reorganization, Cohen & Company was replaced and Tate, Weller and Baker became the new accounting firm. How much did the accountants charge? Tate Weller's audit fees were $15,000 with additional $3,000 tax fees. Cohen's fees the previous year were the same. Now let's look at the financial statements a bit more. The statement of assets and liabilities shows investments at fair value of around $117 million. And the fund's liabilities are fairly low, around $160,000. The statement of operations shows the fund made around $4.3 million from interest and dividends. Pretty great. Expenses were $343,000 due to some advisory fees waived. However, the statement also shows that it lost money in investments. Statements of changes in assets at the end of the year, they had about $117 million. The fund issued new shares worth about $13 million, but investors took out about $5 million. Finally, diving into some key numbers, end of year, asset value was 16.78 cents per share. The total return to investors was 1.62%. It is important to compare this fund versus its peers to see if it performed well. The accountants Tate, Weller and Baker gave the fund a thumbs up, saying the financial statements were fairly presented. The report states that the advisory agreement between the trust and CCM was unanimously approved by the board. Because of the reorganization, Cohen & Company was replaced and Tate, Weller and Baker became the new accounting firm. Of course, the big bosses are signing off, certifying that the information in this report is accurate. Overall, the CCM Affordable Housing MBS ETF is a niche fund tied to the mortgage market. The numbers paint a picture of okay performance, but that lags behind its benchmarks, a big change in management and some significant structural shifts. So, is this a good investment? Honestly, it depends on what you're looking for. It seems like they are very focused on social investing with the affordable housing side of it. However, from the numbers, it is hard to see the benefit of this fund compared to the index fund, which would have performed better. Also, consider the risks when considering interest rate risks. That's all for today's episode. If you found this useful, hit that like button, leave a comment, and definitely subscribe so you won't miss our next corporate decoder breakdown